Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for February 18th, 2024, even though I'm filming on the 17th, but most of you will be watching this on Sunday. Anyway, I hope you guys have had a great week. We have seen some volatility despite the market being stretched. Now, when I say the market's being stretched, I mean equity markets are stretched, and we're going to be using that to our advantage this week. So make sure you don't go anywhere. Hey, if you like these videos, you think they're very beneficial to you, make sure you give us a thumbs up, subscribe to the channel down below so you don't miss any of these videos. Now, remember, subscribing to our YouTube channel is free to do. You just hit the little subscribe button. You hit the bell icon and you actually get notified on your desktop, your mobile device, if you're watching YouTube there, when we push out new week ahead videos. So make sure you hit that notification bell icon as well. Again, subscribe, like these videos. All right, let's talk about, let me get to this, and let's talk about this last week and some of the things that have developed. First of all, inflation data, CPI, producer prices, they did come out this week. If you didn't catch the data, it's what created all the volatility, right? And I want to point out that when you're looking at this data, and let's go over to Wednesday's CPI data over here. You can see how the UK CPI came in weaker than expected. Actually, Switzerland did as well, which was a key development in the dollar Swiss continuing to move higher, and the Swiss pair is moving higher for that matter. But if you look at like the US data, whenever we had the US CPI data, which happened to be actually on Tuesday, you can see we beat across the board. You can see all that's down here, right? And then on Friday, we had producer prices come in that came in, for the most part, just much better than expected. Now, the dollar has had limited reaction, and that is a little concerning to me. We're going to get in the charts here in a minute about, the dollar index and why that's concerning. But I think that the dollar is being pulled in a couple of different directions. So I'm not super concerned just yet, but I don't like how the dollar didn't really react to all of this strong data. The flip side is, as I said a little bit earlier, the equity markets are a bit stretched here. So anyway, there's that. We're going to talk about all those charts and going into them, and I'll show you the technical reasons why I'm a little apprehensive at this point. Also, don't forget, China is back from their Chinese New Year, Lunar New Year, from their holidays. The US does have a holiday on Monday. We have President's Day. It always sneaks up on me. I never really, I guess for probably the last, I don't know. I want to say the last couple of decades, I have not really felt great about celebrating our presidents. So it just kind of sneaks up on me. It's one of those holidays. But, I'm going to say this. We are going to be broadcasting the face show. So for those of you that watch our face show, let me just make sure you all know where to find it. You can find the link in our description, but the Flow show will be broadcasting, which is our European show. It's free. And then the face show will also be broadcasting as well. Even though markets might be kind of quiet, but there's a few things that are happening later that day that we need to really be talking about. So that's why we're going to be broadcasting. Also, if you are in the Forex Analytics community, we will be broadcasting the Morning Edge. After that, I actually have to, I have some things I need to tend to. I have a football soccer match that I have to be at on the other side of town. So therefore, make sure you guys are in the Forex Analytics community come Monday morning, despite being a holiday. All right, so going back to what's happening this week, let's take a step back, let's take a step forward, and let's look at all the things that are happening this next week. So when you talk about Monday, we have President's Day, but Monday evening, okay, you're going to have Australian monetary policy meeting minutes. Now, we talked last week how important the 200 DMA is, and that's why I circled it last week. Now, remember, we're using our live charts here that I use only specifically for these week ahead videos. So when I do these week ahead videos, you're going to see me draw on these charts. I won't come back to them until the next week. I do that specifically so we can go back and reference what we were talking about last week in last week's video, right? Now, throughout the course of the week, I do actually update the dollar index because that's universal. So I have to use it. I use it on my other charts for, the morning edge show and everything else and the face show. But for this specifically this week ahead video, I leave, the drawings, unless I had to come reference them throughout the course of the week, but usually I just leave everything here. So I'm just moving this back over. I think the 200 DMA is going to be very important. But what we're finding in the Aussie dollar, and let's discuss a little bit more about this Aussie, and let me move myself out of the way. We have this head and shoulder pattern. You can clearly see it. It's very visible at this point. That doesn't mean that just because you have a head and shoulder pattern that it's going to complete, right? But it does, and we can obviously see it here that we're in process of this head and shoulder pattern. Now, the risk that we have with the Aussie is it's consolidating around the 618 retracement. You can see that right over here to the right-hand side, right? So we've been on both sides of it, and I think you've got to be just a little cautious if the Aussie breaks back above this 65.40. We were probing it Friday afternoon. Friday afternoon, we saw a pretty bearish reversal in equities, which I will discuss a little bit later. But because of that, the Aussie, peeled back a little bit. Anyway, we have these meeting minutes Monday night, and that would be Tuesday morning in Australia. Now they should. Now I'm going to put an emphasis on they should read a little bit more hawkish. So the risk is that they don't. And if they don't read hawkish, then we're going to have a little bit of an issue with the Aussie. And I think that's one of the key risks right now. So again, the 200 DMA is really key resistance. Also this horizontal resistance around 65.50, 45, somewhere around there. Also, that's something that's happening on Monday night, but it's actually Tuesday morning in China, is the 1 and 5 year loan rates. And China is expected to actually come in and cut the 5-year loan rate. Let me make sure I got that number correct. They look to cut to 4.1% from 4.2%, so 10 basis points. But remember, China is a little, and coming off of the new year, China and President Xi is probably a little disturbed with the China 50. Let's take a look at that market. Let me see if I have it on I don't. So let's add it really quick. We'll use the IC markets. That's fine. I'll just use this data feed. So you can see China 50, obviously very under pressure. We established a new low. And this is not a good sign for China, and it's obviously not a good sign for President Xi, because confidence erodes as the equity markets continue to move lower as China provides stimulus. And so the thing is will China and the PBOC make further efforts? So can those 1 and 5 year rates get cut even further? That's entirely possible, and that's why we need to be watching that on Monday night, Tuesday morning. If you guys are in Asia, it will be Tuesday morning. Okay, let's go back to other charts that we're talking about. So as I do this, let me get rid of myself here. Okay, Tuesday. Canadian CPI. Now, one of the things about the dollar CAD, I have to say, it's been very frustrating. I'm not long dollar CAD. I do have Canadian exposure. And if you're in the Forex analytics community and you are in the trades room, this would be the trades room, right? In the Forex analytics community, I will post my open positions so you can see what trades that I'm trading. You can see what other traders are trading as well. It's not just myself. It's not just the staff. There are plenty of us that are posting what positions we're in and what positions we're taking. You can see my post there, and I'll put a board of all my open positions from usually every day or two. Anyway, the reason why I say that is I do have Canadian exposure, but I am a little frustrated with how the dollar Canadian is moving. Now, this flag pattern that we have here, it could still play out theoretically, but I'm going to just delete it because What's really happening here is it's pulled in two different directions. You have A, dollar strength, but B, you have crude oil strength too. And since crude is Canada's predominant export, the Canadian dollar is very affected by what's happening in crude. And since crude's near $80 or, keeps bouncing off there, but it's still relatively strong, that is keeping a, kind of push-pull between the Canadian dollar and the US dollar, Canadian dollar specifically. But we do have Canadian CPI that's coming out on Tuesdays. So with the Canadian CPI, the risks are, wait, let me see. Yeah. Okay. Yeah. We also have retail sales. I just realized that we have retail sales, not only CPI, but also retail sales as well. But the market is expecting the Bank of Canada to be relatively hawkish because of their proximity to the U.S. and sensitivity to the Fed. So if that Canadian CPI comes in a little weaker than expected, you see CPI is obviously stronger in the U.S., but if that doesn't translate to Canada, that is what's going to provoke some dollar Canadian weakness. But notice, and I want to point this out, that seems fairly obvious, but I just want to make sure I'm clear on this. You can see that we're actually making higher lows and higher highs. Despite us being frustratingly sideways, the fact of the matter is we are grinding higher. And so there is a risk, topside risk to the dollar Canadian, especially on a weak Canadian number. All right. So that's something I just wanted to make sure I pointed out this week. Now, Tuesday night, we have, and I can go back to the Aussie, but actually I'm going to take you over to the Aussie Kiwi. Now, the Aussie Kiwi is obviously going to be it's going to be a review also of something that I was a setup from last week. The Aussie Kiwi, and I'll talk a little bit about this a little bit later as we go through our review portion of this video. And by the way, just so you guys all know, I do talk about the trades from last week, the setups. I review them, and then I give you new, fresh setups for the week. You can find that at the very end of this video. I try to chapter these videos so you can actually just kind of scroll back and find those if you want to skip all this stuff. But I will come back and make sure I talk in depth about the Aussie Kiwi as well. So the reason why I watch the Aussie Kiwi so closely is because its relationship between New Zealand and Australia. But more importantly, technically, we're just knocking our head up against resistance here. So as a result, I think that Aussie wage prices might be fairly important Tuesday night, which would be Wednesday morning in Australia. That could actually move not only the Aussie, but the Aussie Kiwi as well. Now, the Aussie's being pulled a couple of different ways, because if you pull up the Aussie yen, for example, and let's pull that up we'll just pull it up on Forex.com. You'll notice that we are approaching really, really big resistance. I mean, this is a huge, huge resistance level, and I am bullish these yen pairs and have been literally for the last couple of weeks. But you can see how we're nudging ourselves right up against these highs. So whether you get a strong wage price or you get a weaker wage price, I think you can trade it in a couple of different directions or in a couple of different ways. Whether you're trading through the Aussie Kiwi on the short side, Aussie New Zealand or Aussie US dollar on the short side, or maybe the Aussie yen to the upside. And also, look, if the Aussie wage prices are weak, the FOM or the Aussie monetary policy meeting minutes also come in weak the day before. Maybe the Aussie yen is a good setup for a short because your risk is very well managed in this particular chart. And point that direction. You can see it there. Okay. Yeah. So you can see how we're nudged right up against resistance. It's a good risk reward to be on the short side. The problem I have is being long yen while yields are breaking out, which we'll get into in a bit. All right. Continuing on. Wednesday we have the FOMC meeting minutes. So I'm going to go into the dollar, but before I do that, I do want to talk a little bit about the Rand, because the Rand, we've talked a lot about it consolidating, and you can see how it's consolidating really tightly. Now, I want to also point out that if you're looking at the Rand and you want to just see how sensitive it is to equity markets as a whole, like most emerging market currencies, as you see the stock market go down, it spikes up. Stock market goes down, it spikes up. Stock market goes down, which this is the S&P that happens. This is COVID, right? When it goes down, you can see the spike up. As the stock market was under pressure, the dollar rand rallied, right? So what we've seen recently is we've seen stocks come up, but the dollar rand hasn't come down. So what's the risk here? Well, the risk, as you can probably, come to the conclusion at this point in time, let me get this out of the way, is that if stocks actually come down, the dollar rand is at risk of a further breakout to the upside. Now, we do have, whoops, that's not what I wanted to do. I wanted to do this, grab the wrong thing. So the risk is actually tilted to the upside at this point. Now, we do have South Africa inflation coming in Wednesday morning. All right, so that's something that could be the catalyst that at least pushes us up to resistance. So just keep an eye on the US dollar South African rand in case we cruise higher. Now, like I said, we have the FOMC meeting minutes on Wednesday. So the FOMC meeting minutes, I'm not expecting. Let me grab the dollar index really quick. There we go. So, and we're going to zoom in and we're going to talk a little bit at length of the dollar index. Okay. So we're not probably going to get any indication of, monetary policy or how the FOMC members are feeling that we don't already know. And there's a lot of Fed speak this week. We've got a lot of Fed governors speaking. So there shouldn't be any new big reveals, except if there is conversations surrounding quantitative tightening. And that is going to be something that could put the dollar under pressure, perhaps, or, at least it could create some volatility come, this next week. So be on the lookout. I'm not, like I said, I'm not expecting a huge move here unless there's some mentioning of quantitative tightening, and that could create some volatility. But if you look at the dollar index, I want to show you that we've completed the inverted head and shoulder pattern. You guys have seen that, right? Clearly. We've been discussing this literally since the beginning of the year, and the dollar index has completed the head and shoulder pattern this week. So do you guys all see that? Because I'm going to start deleting stuff. We had this range expansion that would take us to 104.80. We had this inverted head and shoulder pattern that we've been talking about for weeks, completed this week, got us to 105. So you when you look at the dollar and you go, okay, the dollar isn't really responding so well to the economic data, that we got this week with the CPI and the PPI. I get that. It's like, I mentioned this at the very beginning of the video. I don't like how the dollar is responding at these levels, but you can't really say it's not acting well, because as stocks continue to forge out new all-time highs, the dollar has been stubbornly strong. So what happens if equities actually start to show some weakness? Depends why they show some weakness. That's my answer. So let me explain. If the if US economic data starts to weaken significantly, the dollar will weaken and stocks will weaken. However, if stocks start to weaken because valuations are stretched, as I said earlier today, not only are valuations stretched, the stock market in itself is stretched at current levels. I think it's a little overbought, which I'm going to talk about in just a bit. But if you start to see the stock market just move down because of that, not because economic data is weakening, you can actually see the dollar really strengthen as a result. So keep that, sorry, I didn't mean to hit the microphone there. So keep that in mind as we go through this week. Why is the dollar weakening? Is the dollar weakening because weak economic data? And then your next question to me will be, and you're probably thinking about this right now, well, hell, Blake, what kind of data could really, weaken the dollar this week? We have FOMC meeting minutes that you just talked about, but what else do we got going on? Well, on Thursday, which I'll talk about all Thursday here in a second, Thursday we have US PMIs, but we also have Eurozone and UK PMIs, which, we still are thinking US exceptionalism. US, the PMIs continue to be good. Here, European PMIs are weak. Favors the dollar, right? But how about if that narrative shifts a little bit this week? We'll see. Now, that's when we get to Thursday. But I want to show you something else with the dollar index. So just let me get rid of myself so we can do a little bit more work here. All right. So we came up to like this. This is a big resistance zone. You can see how we kind of overshot that resistance zone. I'm going to delete it. Okay, done. Extension, done. Complete. Inverted head and shoulder pattern, done. Complete. Let's delete it. Inverted head and shoulder pattern, done. Delete. Done. Got it? Good. Okay. Purple line. Don't care about it right now. It's too far away from where we're at. Don't care about that. I don't care about this one either. Let's get rid of it. Do I care about that one? Nope, not right now. Okay. How about this green one? Nope. Let's delete it. Okay, great. Now the chart looks a little cleaner, right? This line, does it matter? Arguably it does. It came in at around the 618. We overshot it slightly when we completed the head and shoulder pattern. But does it matter? Maybe. Green one, does it matter? Maybe. Actually, you know what? I think what's probably worth drawing right now is this is a resistance zone for the dollar index. I think that's probably viable. Okay, now, Blake, you talked a lot about this. So now that it's cleaned up, what do we do? Well, first of all, we're going to extend that. We're going to extend that channel out, right? Because you can obviously see we are grinding higher in a channel. We're making higher highs and higher lows. It's the definition of an uptrend. Got it. Okay. What else do we see here? Well, I also could argue that we have another head and shoulder pattern that's developing, and it's a little bit longer term here. It's more of a complex head and shoulder, which could take us to highs. Okay, so now if you're thinking about what I just drew and you go, oh, shoot. I mean, you look at the potential of something like this. Where does that take the dollar index? Well, it takes the dollar index back to 2023 highs. Now, I know if you're short the dollar, you're looking at that going, mother fudge sickles. Is that even possible? It is. Why wouldn't it be? Because if the U.S. economic data continues to stay strong and everybody else continues to weaken, which has been the trend of the beginning of 2024, and then you see an overvaluated, stretched stock market start to show some weakness, next thing you know, you have a dollar that's trading up at 107. So the dollar may have underperformed this week, but don't write it off just yet. We start breaking through this channel support, I might get a little nervous about dollars. That means we have to break below 109, or 109, I'm sorry, I didn't mean to say that, 103.90, 103.85, somewhere around there. We start breaking below that, I am going to be a little bit more nervous about being long dollars, but not yet, okay? All right, let's continue on. As I mentioned to you guys just a bit ago, we have, Wednesday, let me confirm that. I want to confirm this really quick. After FOMC meeting minutes on Thursday, yeah, it's on Thursday because we don't have anything. We don't have anything Wednesday night or Thursday morning. So we go into Thursday, all right, and we have UK and Eurozone PMIs. So let's jump over to the euro really quick. So the euro, the euro's bounced and it's holding up pretty well. You actually look at one of the reasons why the euro's looking as decent as it is. We have consolidated around the 618. I want to give a little hat tip to my colleague Ryan Littlestone. He is very, very loud, as he normally is. Just kidding, Ryan, if you're listening. No, but he was very loud before he took a holiday with his family the last couple of days of last week. He talked about being long the euro at the 107.10 level or 107. I forget exactly. You could go in our trades room and find out exactly what price he bought the euro at. But he was playing off at this big level, this big 618. And we closed the week, near the highs. Now, I do think that the euro still, it looks better on a lot of the crosses. One of the reasons why the euro looks as good as it is because the euro sterling bounced really off of very critical support. If you didn't see this from last week, because the UK data wasn't as good overall as the market was hoping, you saw the euro sterling just bounce off this 85 pence level. So that's supported the euro. A lot of euro crosses look better. Euro Swiss, Euro Canadian, Euro Aussie, which we'll talk about those in just a bit. But anyway, we have Eurozone and UK PMIs. So if you go back to the euro, I'm not short euro dollar, so to speak, but I'm going to say this, I wouldn't mind trying to play it for more of a squeeze if we can get above this resistance around 108. I've been looking at the 107, 108 level as being the range in play. You can see it right here on the bias chart that we do every day with our traders, our Forex analytics traders. But you can see how I put an asterisk next to 108. This is on Friday when I type this out. And we do that every single day on the Morning Edge. Remember, the Morning Edge is the show that we do with our Forex analytics community exclusively. So if you are a Forex analytics member, you can go into that show. And we do this bias chart every single day. Okay. And we cover these instruments and we cover everything else too. But the reason why I'm mentioning this is because if we get above 108, I think there is some squeezability with the euro, right? So keep an eye on that, just in case European PMIs come in a little bit better than expected. Now, sterling is trading very heavy. I don't know why I drew this squiggly line here. Oh, you know why I drew it? I know why I drew it last week. You guys know why I drew it last week. Because we were talking about what if economic data weaken. Why is that important? For the UK data. So if I said European, I meant UK data. Because we are developing, and I drew this last week in the squiggly line, but I'm just going to draw it for you here now. This is a cup and handle pattern. And so, or it's a head and shoulder pattern, or however the hell you want to look at it. All I'm going to say is if we break through 125, sterling bulls are going to have another thing coming. Now, is that entirely possible? What if? I always like to ask the what if questions. What if Eurozone PMIs come in, okay, not so bad, a little bit better than expected, but UK PMIs start to really weaken and everybody goes, UK stagflation. And then next thing you know, you got the sterling trading well below 124. So that's is a risk this week. Not saying it's going to happen. I'm just saying that is a risk. Look at the price action in the sterling. It looks like crap. Okay. Moving on, we have Mexican GDP coming out. Now, you guys know I've talked a lot about the dollar mex, and I'm going to just delete this, and we don't need that. Whoops. I don't know if I just deleted something, but we don't need that. We completed that. We don't need this. I'm going to keep this. And I'm going to move that right there. And I'm going to delete that. And what I'm also going to point out really quick is we are making higher lows. We're holding 17. You could probably, I'm going to delete this as soon as I draw it, but you can argue that, we got a little head and shoulder pattern developing here, right? Right. Okay. We also have Mexican GDP on Thursday morning. We have meeting minutes. They come out same time as the data, and they might actually confirm that rate cuts are coming. Rate cuts. Now remember, Mexico is an emerging market currency, and it's also a LATAM currency. And LATAM, one of the big trends right now, with those central banks has been, starting to get more dovish and cut rates in certain instances. So, Mexico could be next up. And if we break that 200 DMA, I think it's going to squeeze. And then we're going to be squeezing probably back to this this descending trend line, which actually you could take it all the way back from COVID highs, right? So, we could really start to squeeze on a break above the 200 DMA. All right, so just a little heads up. One of the other things I wanted to mention, I forgot to mention this earlier about the Eurozone PMIs. The ECB also is going to publish their account of January meetings and their minutes, and it could really talk about the importance of some of their staff projections that they have, and I think we need to watch how all the policymakers, whether they're in agreement or they're really starting to disagree, which my assumption is, they're probably disagreeing quite a bit amongst the ECB, because of the mix of European countries and, different regions and how they're responding to current pressures right now in the economy. So that's just the staff projections you should be watching. I should have said that earlier when I was talking about the Eurozone PMIs. All right, continuing on though. On Thursday, we have Canadian retail sales. Now, I know I'd already talked about the dollar Canadian, all right? But let's talk a little bit about, now I know a lot of you live in Canada, but what we should be looking at is some of these yen pairs. And, I think the yen is obviously still going to continue to weaken. I say obviously because if you listen to our daily shows, remember, if you listen to, the webinars every day, the flow show or the face show, we've been talking a lot about, continued yen weakness because of what's happening in yields. I just pulled up the Swiss yen. I meant to pull up the Canadian yen. All right, the Canadian yen, if you haven't noticed, is breaking out. So if that retail sales data comes in strong, look at this CAD yen. This thing is, that's that right there. Here, let's just do a little bit of scrunched up drawing. You guys ready to see it? If you haven't seen it already, can you see it? Do you know what I'm talking about? Am I gonna catch you off guard here? We're gonna do a little bit of drawing. You guys want to do a little bit of creativity? Imagine you're a kid with a Crayola crayon and you want to do, well, what does that look like? Well, yeah, that looks like a cup and handle pattern. Now you don't even want to know where this projects to, but any which way, well, yeah, you do, right? Of course, that's why you're here. You're like, well, of course, Blake, why am I tuned in at this point in time? I want to learn how far would it go? Well, let me just show you. If it really wanted to complete, now, this would be kind of crazy. I know if you live in Canada, you'd be like, what? Can that happen? I mean, I don't know if that's possible, but yeah, you're dealing with the yen. Anyway, the one thing I just wanted to point out, whether that happens or not, I think we're getting way too ahead of ourselves at this point. The one thing I want to point out is the Canadian yen is grinding higher, and it's going to start squeezing soon. And this is when, if you're short Canadian yen all week, I'm going to assume that you've been throwing shit at your computer screen all week long, being short and super frustrated. Imagine how frustrated anybody who's short this pair is, right? Then you just toss on a little bit of strong Canadian retail sales and everybody goes, what the? And then next thing you know, we're screaming higher. We have US PMIs also on Thursday. I need to mention this because, we talked last week about yields breaking out and the risk of them breaking out. Well, guess what? They broke out. We'll talk about that in a little bit. But because yields broke out, this is a reflection of strong U.S. economic data. So if the U.S. PMIs continue to be strong here, keep an eye on yields, because if yields go up, that means that dollar goes up too. So just remember that, okay? Late Thursday, late Thursday, we have New Zealand retail sales. I say late Thursday. It's actually Thursday. It's actually Friday morning in New Zealand, but we have retail sales. Just look at the Kiwi though. Kiwi, I thought it was a flag pattern. It still could play out like a flag. Like this could still do this. It's just been very frustrating around this 200 DMA, this 50% retracement. You can see how frustrating it's been. So I'm going to delete this for a second. I'm going to delete that, and I'm going to delete that. So can a head and shoulder pattern still develop? Sure it can. But what I'm going to just reference right now for us is the 50 DMA, which comes in right at this high, and the trend low. Now notice we're in the middle of this very frustrating trend, but you have to think about it from a maybe portfolio manager's point of view. If I'm long some Kiwi dollars because it's risk on, and China's going to turn, and so why not be long some New Zealand, blah 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 blah. Well, you're probably pretty frustrated at this point because we can't get out of this range. So just watch the Kiwi here. Now, last but not least, on Friday, we're going to have German IFO data. So we should probably pay attention to German IFO data because German PMIs have been really in the tubes. So business confidence is going to be probably pretty key coming in Friday morning. Now, I want to cover some other things before we go into our best trade setups of the week and a review of last week's. Let's talk about equities really quick. I mentioned when we first came on that the market is stretched. So let's take a look at the S&P. Now, what I want to talk about really quick, because we're like in between fib levels. There's no extensions really close to where we're at the moment that you could pull up some intraday ones. I'm sure you could probably pull up like this move here and say, well, Blake, there's 161% extension of this move, and we're kind of stalling around there, and you could make some arguments like that. The way I'm looking at it though is just a very divergent, and let me change this really quick. Let me just make this a little thicker just so you guys can see it. What you're going to notice here is a very divergent relative strength, right? So as the market continues higher, it's moving higher on lower strength, which is a risk for bulls. Now, I want to just draw a couple things out just before you get like super bearish, because I don't want you to get super bearish yet, right? But what I would say is we have this channel that we're following, right? And I think this channel, and this can stretch all the way back here. Okay, you guys can see it. Right here. Let's delete that and let's clone that. All right, you guys with me? All right, nice little, very, how should I say? Very orderly, that's the word I'm looking for, channel. So what that really tells you is the risk is if we break below 4,900. Now I'm going to say that Friday's close was pretty bearish, and I think that is a risk for the market. And I do think we're stretched, and I think relative strength is divergent. So I just want you to keep that in mind as we move forward. One of the markets that's doing really, really substantially well is the Nikkei. But look at how the Nikkei is reaching for the 261% extension. That's bazonkers, right? Yeah, I made up that word. That's something you have to keep in mind, because these markets, as they get stretched, if they come down, they're going to come down probably in unison, right? So you got the German DAX. Everybody, this is one of those that's been just kind of, why is the German DAX going up when German manufacturing data continues to just show so much weakness? I don't know, but what you're going to notice here is we've got on this we try to break the 127% extension, but notice how there's a doji there. So a bearish candle would actually give us an evening star. I'm not saying that is going to happen, but on Monday I'd be probably watching the DAX kind of carefully. All right, now you take a look at crude. Crude has been very, very strong. Let me delete some of this stuff really quick, just in crude. Now, there's a reason why I want to talk about this. Obviously, we're at the 200 DMA. You can see we're at the 38% retracement. Let's get rid of that. I don't want that right now. And what you're going to notice is, if we start getting above $80, we're going to start to squeeze. Crude, I always like to say this about crude oil. Crude can be a confirmation of of a strong or a strengthening or a weakening global economy, but it also can put some serious pressure on asset prices, and in either direction, really. Right. So in the environment that we currently we're in an environment from a macro point of view that globally inflation has come down, but it's settling. It seems to be, it might be settling, especially in the US, settling at levels that are above the Fed and other central banks, ultimate target. Why is that a risk? Well, that's a risk if crude starts to rally, because if crude starts to rally, inflation expectations are going to go back up. And if they go back up, it's going to make it very difficult for the Fed or any other central bank to actually cut rates as the market is expecting. So watch crude oil. If crude oil gets above 80, not only would it squeeze, but it's going to start to flame up. That's the word I was looking for. Torch inflation expectations, and they're going to start to go higher. And if they start to go higher, the Fed's going to be like, we can't cut rates. And if the Fed can't cut rates, stocks are going to go, shoot, we priced in 6 rate cuts this year in December. Now we're at 3 or 4. Now, how about if we're only going to get 2 or maybe even 1? Or how about if none? Then you're going to see stocks really come down. So watch crude oil. Crude oil is that one asset that we need to be paying really, really close attention to. One that's not really moving is gold. I thought gold would be a little bit more bearish right now, but you can just see how gold's just fluttering around. I have a hard time being short gold. I'm just looking for places to be long, but I will obviously admit here, if gold breaks below 1975 and the 200 DMA, it's probably going to usher in some weakness back down into the 1800s, I would assume. All right. Now, this is the point that I really want to discuss the trade setups from last week, the review from last week. So let's get into it. And then in a few minutes, I'll do, this week's setup. So first and foremost, let's talk about the Aussie Kiwi. I am still short the Aussie Kiwi. Matter of fact, I shorted it because I told you I was going to. I was going to short it into this resistance, but things look so much more bullish at the moment that my short is at 106, and I've been short all week at 106, like 93, or I have to go back and look at my price. Anyway, I'm still short the Aussie Kiwi, and it's given us a couple looks up there. And while we're below 107, I still want to be on the short side. But remember, there's a lot of moving parts this week with New Zealand retail sales. You have Aussie wage prices, all that. You have a lot of China coming back online. So just watch the Aussie Kiwi. I'm going to call it a win because first of all, I'm profitable. But if you traded it on the short side, you might be a little bit underwater. If you got in just as it got up to this resistance, I think you just have to be mindful that you don't want it to see above 109. Because I said unless it gets back above or back below 106.60, and what I want to do is I actually want to add to that short. So if you go to the second setup was the long Euro Swiss, I am obviously really long, and I actually added to my position this week. I think I just showed you in the trades room. This would be, what day is this? Thursday. Added a little Euro Swiss long. I added 1/6 of my total size. And you can see where my average price is, 94.34. Now, going back to the Euro Swiss, where is it? Did I not put it up here? I might have to put it up here. Let's see. Oh, there it is. So here's the Euro Swiss. It continues to rally. Here's your daily chart. We went from last week at 94.40. We currently trade at 94.80, and we're struggling as we're reaching 95. So that's obviously a win. Now, the third setup from last week was a breakout in U.S. yields, or short the 10-year. Last week we were here, and we broke, and we're breaking. And we're probably going to continue to break because this is a double top, remember? And we have extensions that take us down here. So where does that take us in the 10-year yield? Probably up to 450. Now, you are going to have to see you're going to have to see continued strength in U.S. economic data, which will be the U.S. PMIs on Thursday. And, we also have the meeting minutes too. All right. So let's talk about the best setups of this week. Are you ready? And by the way, if you like these best setups and everything like this, make sure you give me a thumbs up right now. It doesn't cost anything to just give me a thumbs up, because it tells my team that you appreciate these videos. Also, it doesn't hurt to also take a trial of Forex Analytics. It's only $1 for 10 days. Then you can be inside the chat room with me all week. Then you can see analysis on all these 30 instruments, whether you're talking about an Elliott wave count, or you want to see a harmonic pattern of what is developing in the euro, and you're like, oh, where's Andre think the euro is going from here? Or you want to just read my basic technical analysis throughout the course of the week and understand what I'm thinking, because that's who updates the basic technical analysis every evening on these assets. Well, if you want to do that, it's only $1 for 10 days to try out Forex Analytics. So make sure you do that. Okay, now let's get in the best setups. And by the way, if you're involved in our community, I give you these best setups, what I think are the best setups of the week. But guess what I do throughout the course of the week in our community and on our daily shows? I talk about them. I don't just say, oh, yeah, my best setup was the Aussie Kiwi, and then I don't talk about it the rest of the week. No, we talk about it all week long on our shows, because I'm navigating through, I'm trading a majority of these positions that I think are my best setups. All right. In one way, shape, or form. Like I'm, buying dollars as yields go higher, because I know that yields are going to go up. So I'm going to be buying the dollar. What dollars am I buying? Well, come jump in the trades room so you can check it out and understand. All right, continuing on. So best setups of this week. First one, I'm going to just say short whatever you want. S&P, NASDAQ, Russell, Dow. But my favorite choices would be, short the Dow because we came out of a wedge. Short the NASDAQ 100 because I think that we are, you can see this bearish outside day, excuse me. And like I told you a little bit earlier, I think these markets are stretched. So shorting U.S. equities stops above this week's highs. I think that's trade number one. Your dealer's choice, right? You choose whatever market you think is best. I actually think the Dow or the NASDAQ are going to be the best. And by the way, if you haven't seen SMCI on Friday, you watch that price action. Holy shnikes. Yeah, the stock has been up crazy amounts, but it was down 25% intraday. So that's your little canary in the coal mine in the NASDAQ sector. Okay, next, what else? Well, I think copper is a short from here. So let's pull up copper chart, and what you're going to see is we rejected a 618. Now I don't trade copper per se, but I know a lot of you are European or non-US traders and you trade CFDs. Look at Friday's price action for copper. You can trade copper. Just be on the short side, and as long as we don't get much above the 618 retracement, I think copper looks like it's going to come back down. You know how I'm going to play it? You guys should know. Yeah, continue to short Aussie dollars. Last but not least, long dollar yen or euro yen while yields continue to break out. Now, I like the dollar yen. I do not own it right now. I own a yen pair. You will know that if you're in the trades room. But you have the dollar yen that continues to look strong, and as long as we remain above 149, okay, then the dollar yen looks like we're going to pierce, the 152 level. I think we're going to eventually make it to 154, and this is going to be a setup for a short. That's if you guys just listen to the trade-off, if you listen to the trading battle this week, I did the trading battle, I did the trade-off show, And I've talked about the yen quite extensively, and I'm going to talk about it right now. I think the dollar yen continues to break out, and then once it gets above 152, I'm going to be looking for shorts. So there, I said it here. But that means this week we're probably going to continue to look for a breakout. Look at the euro yen. The euro yen continues to defy gravity. Now, if you look at the euro yen, I think you can play euro yen or euro dollar, euro yen or dollar yen. This, to me, is our harmonic pattern that can take us all the way up to probably the 88% retracement, somewhere around here. So it could obviously continue on too. So it's one of those other positions that if it really wants to go, it can go, and it could really take off. But just realize it is broken out of a triangle pattern. That's the most important thing that we should all note here, is that we broke out of a triangle consolidation, and it looks vulnerable to a rally into new highs. All right, guys and gals, if you think that this video has been beneficial to you in any way, shape, or form, and prepping you for the following week, make sure you give us a thumbs up, subscribe to the channel, jump in the comments below if I missed something. Maybe if you don't agree with what I'm saying, jump in the comments below. Let's talk about it. Try out Forex Analytics, and also, make sure you check out the Trader Funding Program. The Trader Funding Program is a really great way for you to access larger amounts of capital. But I want to tell you that you're going to be involved in the Forex Analytics community by default, because we include Forex Analytics community in your while you're going through the Trader Funding Program, at least while you're we give it to you for a certain period of time based on what account you're trying. But I want to say that if you've been trading and you're just looking for a way to get just larger accounts because you want to leverage up a little bit, this is a good way to access larger amounts of capital. But if you're just learning how to trade, let's try demo trading first. Try paper trading, and then move your way into something like the Trader Funding Program. All right, guys, gals, I hope you have a great remainder of your weekend. I will look forward to seeing you on Monday, even though it's President's Day. I'll see you on the Face Show. You all have a great one. Thanks for tuning in. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.